Good evening, all. Ira Epstein, and here we are with your metal market wrap-up, and this wrap-up is for the evening of Wednesday, Federal Reserve Day, the 17th of September, 2025, about 6:15 p.m. Central Time. Well, as we reopen the markets are looking and they're taking off in the stock market. You were up, you were down, you were sideways, you were round the table. The Fed cut rates a quarter point. If you look at the dot plot, the members are inclined to go 2 more rate cuts this year. They talk about inflation. When the Fed chair spoke, he actually took the metals down, not up. As he was talking, rightly so, by the way, that inflation is a real problem for the market. The Fed has 2 mandates, the employment and inflation. It's very rare they got inflation going up and you have employment or labor weakening. Which one do you address? And that becomes the problem. He also talked about the 3rd mandate. And the reality is, when you address the other 2, you're covering the 3rd mandate. So Stephen Moran, while he brought that up properly, it's always been there. It's really not what the Fed focuses on, and that was it. So if the Fed chair had called me on the phone and gone, which he would not do, hey, Ira, what do you think we should do? It's exactly what they did. The speech was just along the lines, they're data dependent. They've got 2 problems going on. They've elected to close their eyes like this to the inflation. They know it's caused by the tariffs. If the tariffs weren't here, you probably wouldn't have that inflation problem. It'd be a weakening market, and they can get a little more aggressive with the interest rate cuts to support labor. What they didn't mention is, and by the way, what he did mention in the speech was immigration is causing the labor problem. Better yet, the lack of immigrants coming into America, because as we've shut them off, that became a problem. We don't have people filling those jobs necessarily, which you would think would create a demand for those jobs. At the same time, the tariffs have scared off employers because what's showing up, according to the Fed, is the importers are eating a large part of these tariffs, and their margins are getting hit. As they're getting hit, in part, they're not hiring people. I've given you what he said. It's in my report tonight. I don't make it up. It's right there, and it's very much in line with the thought process I had. So the question is, was that it for the metals to the upside, or do they need to consolidate right now? One of the things you can count on overnight is going to be that we're going to get what's called the yin-yang. We react one way. It's one of the reasons you're probably railing in the stocks right now. Asia sees the market. They have their own view on what this is about. It'll come back to Europe because people sleep. When they wake up, they make their reactions. In Europe, it's 5 hours later right now, minimum. Often, 7. So you're sitting there, if it's 6 now, here, think of what time. It's 1 in the morning. People are sleeping. They'll wake up in the morning, they'll see what the markets do when they react, and by the time you wake up and come back in 10 hours from now, like me, it'll be 10. That's when I'm up at 4, so I'll be looking at the markets. Away you go. And you decide what you do or shouldn't you do. Before we get on this chart, let's also take a look. You're going to get jobless claims. They're going to be important tomorrow. The market's looking, especially the Fed, is continuing to weaken. They were surprised by a 263 number last time. Now they're looking for that to come down 23,000 to 240. We'll get the Philly Fed regional activity, business activity. I hope it's not like the New York Empire State Manufacturing number, which was a disaster. The Conference Board will release their August leading coincident and lagging indicators and look for 76 billion cubic feet of natural gas going in, and that compares to an average of 74 at this time of year. So let's go back to this chart and get a feel for what you've got. If gold finished here, even with the setback, you'd be at an all-time high. When you look at the chart, you can see how the market is pulled back with today's action, a key reversal down day. Why? The highest high, you closed lower. So unless you take out today's high on Thursday or Friday, the market's going into a pause on the chart. That's what the work says. You've got higher lows, higher highs, still bullish scenario, still well over the 18-day average, bullish scenario. Bollinger Band's far away at 38.21 now, hasn't yet started turning down. And you have an embedded reading. Do I have any reason to be bearish? None at all. I mean, none at all. Lose the embedded reading and I'll be nervous. Then I'd want out. Before that, I'm going to view these breaks as a buying opportunity, but I think you'll have trouble clearing 37.44, so you got to lower your horizon to take money if you're an in and out trader. That's what I'd be teaching. In the gold-silver ratio, you're back over the 18-day average, so gold is acting stronger than silver, and you see that right here. Silver is tonight flirting with losing its bullish embedded reading. Any close under 79 will be that way. Now let's go back to the close today, 80.56. So you didn't lose the reading there, but because you were mostly down, it carries over now. So in order to get this market excited, ideally you take out the highs of today, Wednesday. Ideally. If the market's going to slip down, then 41.36 is a problem area for the market. In the copper market, you've already retraced to the 18-day average. You never did embed. You just got overbought into the Bollinger Band. And I know I'm a broken record, but what I always say is no, no, no. You don't buy into Bollinger Bands or sell into them. It's generally the worst thing you can do, generally. And that's what I teach. When I look at the platinum, all right, you left the uptrend. You've got a higher high and a lower low with today's action. So when you took out the low right here, that ended that. You now have downside bias, momentum down, but not really trending at this point. In the dollar, you tried as your best as you could to extend and get down to these lows, and you couldn't quite do it. And instead, the market lifted itself back into the Bollinger Band. Take that out again, and you're probably going to make the new lows. Now, I was looking at the double lines, Chief Gunlick, and he was very bearish the dollar. He thinks the dollar is just going to continue to come down, and you're going to get aggressive selling by foreigners, by people looking that they realize that with this policy that we have right now, the dollar is a short sale, and I agree with him on the fundamentals of that. But remember what I said, when you start cutting rates, it's generally bearish for the currency. Later on, it can become bullish. It depends later in the cycle when the economy starts going in the right direction. The Fed is not cutting interest rates because the economy is going so good. It's cutting them because they see a real problem in the labor market. They don't have the immigration, the immigrants coming in. They've got fear with the tariffs. The tariff is a real problem for the market right now. It's causing inflation to rise. So those aren't the bullish things in the dollar, and I agree with what his analysis was. If you'd like more of that, I cover it in my newsletters and my morning videos to my subscribers. So how do you get it and become a subscriber? Move your cursor up here. You'll see an icon. Give it a click. It'll take you to the area. Or go to iraepstein.com, research, and that's where you can do it. I'm Ira. You have yourself a great day. I will catch up with you in the other videos tonight or first thing in the morning. And finally, I've got my stock and spider charts. The data got screwed up today. It fixed itself after the close. Nothing I could do about that. You take care.